Okay, as for today, we are going to discuss the new chapter, chapter 5 in Financial Accounting 2. So, chapter 5 is about the preparation and presentation of financial statements. Okay, let us look up on the learning objectives together. Okay, at the end of this chapter, we hope that the student should be able to, number one, understand the basis for preparation and presentation of financial statement. Okay, number two, to understand the concepts, principles, and bases used in the preparation of financial statement. Finally, is to prepare the financial statements that suitable for publication and in accordance to the requirement of MFRS 101. So what is MFRS 101? It is an accounting standard, okay, that covers on the presentation of financial statements. Mm. So as for company, what we have learned in chapter 2, the type of company that we learn is the registered company. So when talking about registered company, the type of company that registered under the Companies Act are the public company, the private company, exempt private company, and many more. So our focus will be on the public company. So all the companies registered under Companies Act, okay, are required to prepare their financial statement. Okay, that is one of the requirement for companies that registered under the Companies Act. So the company must follow the requirement of the Companies Act. So how do the company wants to prepare their financial statement? So the accounting body in Malaysia called the Malaysian Accounting Standard Board has issued an accounting standard for the companies to follow as a guideline in preparing their financial statement. So the accounting standard is called MFRS. MFRS stands for what? Malaysian Financial Reporting Standard. And the code is 101. So 101 is actually represent for the scope, okay, that related to presentation of financial statement. So let me show you how the MFRS look like. So it's just like a notes here, as you can see. So it's like a guideline, a detailed notes, okay, on how do the companies need to prepare their financial statement. So as you can see here, there are a few pages, okay, the introduction part, okay, and these are the contents of the MFRS 101. So as for the public company, okay, since it is registered under the Companies Act, so they have to follow the guidelines that issued by the MASB. So the guideline is called Malaysian Financial Reporting Standard 101. So starting from this semester, okay, you will be introduced to the MFRS. But later on, when you go to part 3, part 4, part 5, and if you pursue your study to degree level, you will learn more on the accounting standard because there are others, there are others accounting standard, okay, out there. So this is one of them. You just now you just learn for the first one, that is the MFRS 101. But actually there are many standards out there that will cover different accounting transaction. So since our objective is to learn how to prepare the financial statements, so we are going to refer to the MFRS 101. However, in this lecture, okay, I'm not going to go into detail line by line of the MFRS, okay. Instead, I have extract the important information and I have shared or gathered, compiled together under this note. Okay, but our main reference will be MFRS 101. Is that clear, class? What is MFRS 101?
Yes, madam.
Yes, madam.
Now, this is very important part, even though this is just an introduction, but I need you to know, okay, the history, the background of companies in Malaysia. I mean the history about the regulation that that embedded for that related to the companies in Malaysia. Okay, first thing, the financial reporting of companies in Malaysia is governed by the Companies Act 2016 and the Financial Reporting Act 1997. Okay, so this is the important thing that you need to know. So the reporting, why do we need to follow the standard? One of them is that the financial reporting of companies in Malaysia is governed, meaning it is being ruled, is being monitored by somebody. Who are they? The Companies Act 2016 and the Financial Reporting Act 1997. So when we talk about ACTA, okay, it's actually the undang-undang, the rules. And if you break the rule, what will happen? You will be penalized. So it's very important for companies. I'm talking about companies. I'm not talking about sole proprietor. I'm not talking about partnership. I am focusing on companies. Companies in Malaysia, they have to follow these two acts. So if they can't follow, if they disobey, then they will be penalized. Okay, so it stated that every company incorporated under the Companies Act 2016 must comply with the Act's provision. So since our focus is on the public company, right? Since we know that public company is incorporated under Companies Act 2016, so we have to learn how to prepare the financial statement that followed on the requirement of the Act. Companies Act 2016 requires the company, okay, what do they require? To prepare the financial statement in accordance with the applicable approved accounting standard and adhere to the relevant financial reporting guideline. So it's very important here. The Act already stated that all the companies that registered under Companies Act 2016, they must prepare their financial statement in accordance with the applicable approved accounting standard. What is the applicable approved accounting standard here? Means it is the MFRS, Malaysian Financial Reporting Standard. So if you are preparing the financial statement, okay, then you will follow the MFRS 101. If you are doing other thing, if you are doing revenue, okay, then you have to follow MFRS 1. I can't remember. Is it 108? I think. Okay. If you are talking about stocks, okay, then there will be different MFRS to follow. Okay, next, section 244, subsection 7 of the Act clarify that if a conflict arises between the provisions of the approved standard and the Act, the provision of the accounting standard shall prevail. So actually there are two resources. Okay, there are two resources for the company to prepare its financial statement. Okay, they can use, okay, what are the resources? The MFRS, and also the guideline in the Companies Act 2016. But if there are conflicts between the MFRS and also the Companies Act 2016, then the Malaysian Financial Reporting Standard, meaning the accounting standard, will supersede. Dia akan mengatasi. Okay, you will have to select the accounting standard as the priority. That is what we meant, shall prevail. Okay, in Malaysia, public limited companies incorporated are required to prepare and publish a set of financial statement within 6 months after its accounting year end. Okay, so now we are focusing on public companies, right? So you need to know that the public company are required not just to prepare, but they have to publish their financial statement within 6 months after the accounting year end. For example, okay, if your accounting period starts on 1st January, okay, 2021, for example, okay, you will close your accounting period on 31st December 2021, right? Okay, so if you are a public company, you are given about 6 months maximum, to publish your financial statement to the public. So the last date, the deadline will be on the 30th June 2022. Okay, this will be the deadline, okay, for company to publish its financial statement to the public. Financial statements, this is the simple explanation, are one of the components contained in the annual report of a listed company. Okay, for your information, the listed company needs to issue its annual reports. So annual report is like a book, and one of the content is the financial statement for the year. There is no statutory format for the preparation of the financial statement. A company can present the financial statements in the format that best suits it. Thus, the layout of financial statement of a company may vary from one to another. However, to ensure the consistency in the preparation of financial statement, the Malaysian Accounting Standard Board, this is the Accounting Standard Board that I've mentioned to you, it is an independent authority body established under the Financial Reporting Act 1997 that responsible in developing and issuing accounting and financial reporting standard in Malaysia, has issued MFRS 101 presentation of financial statement. So what does it mean here is that, so in Malaysia, before that, basically there is no statutory format to prepare for the financial statement, meaning there is no fixed format to follow. So but somehow, to ensure the consistency among one company to another, the Financial Reporting Act, this act, Financial Reporting Act, has established an independent authority body. Mereka telah menubuhkan satu badan yang bertanggungjawab untuk mengeluarkan piawaian perakaunan ni. Dan salah satu yang mereka keluarkannya adalah MFRS 101. So MASB, for your information, don't be confused. MASB is the authority body. This is the macam dia ada satu organisasi. It's an organization lah. Organization. This organization issue MFRS. MFRS adalah accounting standards. Do you know the difference between MASB and MFRS, class? Do you know what is the difference? Faham tak? Apa beza MASB dengan MFRS? Boleh faham tak? Kalau
macam pening sikit, madam.
Apa yang pening? MASB apa? Organisasi. Contoh apa? UiTM. UiTM organisasi tak?
Organisasi.
Betul kan? UiTM adalah organisasi, betul? Satu badan, betul tak?
Betul.
Badan. Kemudian MASB ni, dalam ni ada semua experts lah. Dia ada semua experts in financial accounting, in finance and so on, in economic and so on. So the people in the MASB, will sit together and issue MFRS. The people in the MASB, dia satu organisasi, they are responsible to issue the MFRS. So MFRS ni apa? This one lah. Ni. Siapa keluarkan MFRS ni, kelas? Siapa keluarkan MFRS? MASB. So can you see the difference between MASB and MFRS?
Yes, madam.
Boleh faham Okay, good. So kalau orang sebut MASB, you know it is an independent body. Macam di satu bangunan lah, you nampak, oh itu MASB. MASB located in jalan mana? Jalan Kerinci KL lah contoh. Tapi MASB tu buat apa? Dia bukannya company yang menjual produk-produk. No. They are the ones who issue the MFRS. So this MFRS is actually being developed all the experts in the MASB. So MFRS ni is the accounting standard. So there are many kata apa volume lah, and one of them 101. So 101 is to cater for the presentation of financial statement. Why do the MASB need to issue this standard, because there is no statutory format for the company to follow. So to ensure the consistency, the MASB is responsible, okay, to issue the accounting standard, that is 101, presentation of financial statement, so that okay there will be a proper guideline for the company to follow in preparing their financial statement. And of course, actually this accounting standard is actually comes from the IFRS. Pernah dengar IFRS? Dia tukar MFRS dengan IFRS. Can you guess what is I stands for? What is I stands for?
International.
Very good. Okay, very good. It actually comes from the International Financial Reporting Standard. So it's actually there are what we call a master copy, okay, established on the international level. So when it comes to Malaysia, okay, the MASB customize it, okay, to suit with the Malaysian culture. So frameworknya datang daripada International Accounting Standard Board, IASB. So kita pun ada IFRS is issued by IASB, International Accounting Standard Board lah. This is the world level lah. So to accommodate the culture in Malaysia, okay, the Malaysian government under the Financial Reporting Act 1997, okay, they establish their own body called MASB. And then the MASB gather all the experts in Malaysia and they issued, okay, the accounting standard that suit with the Malaysian, okay, that is called MFRS. But actually the content is more or less to IFRS. Okay, so can you see the difference between MASB and IASB, MFRS and IFRS now? Class, are you with me?
Well, madam.
Because an accounting student, this is very important knowledge for you. Even though it's not tested in your final exam, but it's very important for you to know it, because this is your world. This is our world. As an accounting student, this is our world. This is the thing that we need to know. Kita bukan nak tahu TikTok, kita bukan nak tahu all the social media yang not relevant to us. Okay, we need to know this kind of information as our input. So please student, you must know your priority. Because nowadays there are so many information that you need to filter. Throughout the social media. Don't waste your time looking for something that not valuable for you. So these are the important information that you need to know. There are so many other things. For example, if you heard about the Big Four. What is Big Four? Bukan Big Food Pernah dengar tak Big Four class?
Tak, madam.
Nanti you will be introduced when you go to part 5, but better for you to know before you learn about auditing, because one of the subject that you need to learn after this is auditing. So auditing is a branch of accounting. You have taxation after this. At this level, you already know financial accounting and management account and costing, right? So when you go to upper level, you will learn another branch of accounting, that is management accounting, taxation, and then auditing. So when talking about auditing is one of the final process in accounting. When you have prepared all those, the financial statement, okay, you need to go another process, that is auditing. Auditing is merely on verification job. So the auditors is the experts will verify whether the financial accounting job that you prepare now is following the accounting standard or not. So now we are going to prepare the financial statement, right? We are going to prepare the financial statement based on the MFRS 10. So after we have complete prepare it, there will be another person who will check and verify whether you have been prepared the financial statement in accordance to the standard or not. So the people is called auditor, and the process of doing the job is called auditing. And in Malaysia, okay, in the international level, there are 4 big organization that involved in auditing job. So your job is go back and find who are the big 4. Siapakah 4 organisasi terbesar tu yang responsible for verification of the work. So is your task. You boleh check sambil-sambil you Google tu, please Google who are the big 4. what is Big Four. So kalau you dengar Big Four lepas ni, you dah tahu. Okay. Some student they thought Big Food. No, Big Four. Big Four. So you tengok, Big Four tu actually represent the organisation that involved in the financial accounting punya line lah, but specifically more on auditing job. Okay, next, the standard prescribe the basis for presentation. Okay, this is related to MFRS tadi. Prescribe the basis for presentation of general purpose financial statement to ensure comparability both with the entity's financial statements of previous periods and with the financial statement of other entities. So these are one of the usage for the MFRS. First, we want to ensure the consistency of the preparation between one company to another, and then after we have achieved the consistency, the next thing is that we can also do the comparison between what and what. Okay, between the entities financial statement of previous period and current period, meaning for example compare between 2019 and 2020, and also with the financial statement of other entities between company A, company B. Why? Because you already use the same resources, that is MFRS 101. So since you are following the same guideline, of course the comparison can be done. Besides than that, it sets out overall requirement for the presentation of financial statement, guidelines for their structure, and minimum requirement for their content. Okay, these are the content and the purpose of MFRS 101. Okay, next, all entities filing their financial statement to regulatory authorities such as Companies Commission of Malaysia. So these are the other regulatory bodies in Malaysia. CCM is also known as SSM, Suruhanjaya Syarikat Malaysia. Securities Commission, Suruhanjaya Security, yang ni terletak dekat, tak silap saya, berdekatan dengan, okay, I almost forgot lah, dekat dengan Jalan Duta tu, on the way to Sri Hartamas tu. And Bank Negara. So Bank Negara ni who stay in KL, you can see this is located near to Choket Road tu kan. So you can see the Bank Negara over there. Okay. Should apply the financial reporting standard issued by MASB in preparing their financial reporting or financial statement. So at the end, when you have prepared your financial statement, okay, you have to send the copies of your financial statement to all these regulatory bodies. So that is why we need auditors, the Big Four, to check whether it has been prepared in line with the standard or not, because at the end you need to submit to all these important regulatory bodies in Malaysia. Okay, now let us look at the overview of the financial statement for company. The first thing you need to know the definition, of course. So we're referring to the MFRS. The standard define a financial statement as a structured representation of financial position and financial performance of an entity. Okay, so what you need to know is that you need to know the objective of preparing the financial statement. So you are going to show the company's financial position and company's financial performance. That is the objective of preparing the financial statement. So it suits with the definition. In other words, it represents as an output of company's financial affair to be presented to their relevant users. Okay, so these are the detail. Of the objective. It relates to the definition just now. So what is the objective? Is to provide useful information of the financial position, financial performance, and cash flow of an entity to a wide range of users to help them in making economic decisions. So these are the main objectives of preparing the financial statement. So it's related back to the definition. These are the component that we want to show: the financial position, the performance, and also the flow of cash. To whom? To the users, such as all these following users, to help them to make economic decision. So next, it says that information supplied for users to meet the objective include this accounting component. This is what you have learned in part 1. You learn what is the asset, the company's equity, the liabilities, income, expenses, gain, losses, and cash flow. Cash flow meaning the cash in, the inflow of cash and the outflow of cash. So the inflow of cash and outflow ni can also be represented by check kan. So that is why you have bank account at the same time. Okay, besides than that, it also demonstrates the results of the management stewardship of the resources entrusted to it. So it will able to identify the the efficiency of the managers in managing the business. Through the financial statement, stakeholders meaning the users. Stakeholders is actually the users lah. Who are the stakeholders? For example, like the shareholders. Stakeholders ni part of it is shareholders. Shareholders ni dengan stakeholder ni actually bukannya dia benda yang sama. Shareholders is part of stakeholder. Stakeholder ni ramai. Siapa lagi stakeholder? You ada creditor. You ada customer. You ada siapa lagi? Bank. Banyak. Stakeholder ni users lah. Users. So, salah seorangnya shareholders. Don't misunderstood between shareholders and stakeholders. Some student they thought these are the same thing. Actually, shareholders part of stakeholder. So, this stakeholder may assess what kind of resources were available to the management and how such resources have been used by the management. So, actually, financial statement is a kind of a tool that communicate the financial affair of company towards their stakeholder. Dia adalah satu orang kata apa? Medium komunikasi yang digunakan untuk memberitahu keadaan keuangan sesebuah syarikat kepada pengguna-penggunanya. Okay. So how frequent do company needs to do the financial reporting? I mean to prepare the financial statement. Okay, basically the standard required to complete a set of financial statement to be presented at least annually. At least annually setahun sekali. So setahun sekali by default consists of 12 months. That is why our accounting period usually kita akan tunjuk within 12 months. Okay, so before we prepare the financial statement, okay, make sure you understand well of all of these underlying assumption. I hope all of you have still remembered, okay, the accounting concept that you learned in part 1. Have you learned the accounting concept in part 1 class? Do you still remember going
Yes,
concept
madam.
basis? Very good. So we are still applying all those concepts in preparing the financial statement of companies. The going concern concept, the accrual concept. Remember accrual concept, student always thought we are only dealing with accrual adjustment. No, we are actually also dealing with the prepayment, because accrual requires that the asset, liabilities, equity, income, expenses recognized when they satisfy the criteria of those elements as specified in the conceptual framework. So we are not just dealing with the accrued adjustment, but we are dealing also with the prepayment. Okay, because what we in accrual basis we need to recognize expenses that incurred only. Okay, not when they are paid. So if they are being overpaid, you have an prepayment, right? So based on accrual basis, what you need to do is that you need to adjust for the prepayment. So if there is an overpaid or expenses, the prepayment will become your current asset. While the revenues are recognized when they are earned, not when they are paid. Similar. If you have received the unearned revenue or you have received more than what you should do, the prepaid revenue will be treated as your current liability in your adjustment. Okay, next, you must ensure a consistency in the presentation. For example, the method that you choose in the depreciation, okay, you must be consistent at least for 5 years, okay? And then the maturity and aggregation and the offsetting. Okay, next, another additional information that you need to know, the qualitative characteristic of useful information. So the information that you want to disclose in the financial statement should possess all these qualitative characteristic. So this qualitative characteristic is actually being stated in the IASB. What is IASB class? International Accounting Standard Board Framework. So you must ensure that the information that you want to disclosed in your financial statement is relevant, faithfully representation, no what we call no cheating. You must show whatever that happened, whatever that incurred, you must show it faithfully. It should be comparable, it should be understandable, it should be verifiable, and it should be timeliness. Don't use the outdated data. So this qualitative characteristic can be further explained in these two diagram. So the qualitative characteristic actually can be break down into two scope, the fundamental, okay, and the enhancing. So under fundamental, yang paling asas, there are two, relevance and faithfully representation, while the enhancing ni like a booster lah, okay, are the comparability, understandability, verifiability and timeliness. Okay, so next we go to the another important one. What are the component of financial statement? So in preparing the financial statement, according to the MFRS 101, okay, these are the component. So a typical set of financial statement will comprise the following: the statement of profit or loss and other comprehensive income. Okay, I use the acronym SOPL. The objective is to show what? Is to show the information of the performance of the company. So talking about performance, okay, we are going to report the profit or loss during the reporting period. Okay. So these are the explanation in detail, okay, on the body of the statement of profit or loss. Okay, one of the important thing is that as recommended by the standard MFRS 101, the expenses, okay, by nature method include expenses of employee benefit, depreciation, impairment loss, transportation costs, advertising costs, etc. While the expenses by function, on the other, allocate the operating expenses to the various function activities such as cost of sale, administration, distribution, or marketing, research and development. Okay, for our syllabus, we are going to follow separation by function. Ini the expenses will be recorded based on its function, not based on its nature. Alright, okay, on the body of the SOPL, okay, we can see that there is a term called other comprehensive income section. Okay, this section comprises item of income and expenses that are not recognized in the profit or loss section. Okay, if I can show you the format here, okay, we are talking about SOPL now. Okay, the sections that we are referring to here is the explanation here is actually on this part. Okay, this is that what I'm referring to. Okay, other comprehensive income. The other part, okay, the upper part here is called the profit or loss section. This is called the profit or loss section. Okay, this is called the other comprehensive income section. Okay, get back to the notes. Okay, so this section is required and permitted by MFRS. Okay, so what are the item under the other comprehensive income? Okay, this includes changes in the revaluation, okay, such as surplus of property, plant and equipment, or tangible assets. Okay, what else? Gain and losses arising from translating financial statement of a foreign operations, and then gain and losses on measuring available for sale of financial assets. But for your syllabus, okay, usually the item for other comprehensive income only cover on the changes in the revaluation. There is surplus on revaluation of property. Okay, this one. This the first one. Okay, next, the next component is the statement of changes in equity. So in this statement, okay, it explains the changes of the company's equity throughout the reporting period. So we are going to refer to the company's equity. Class, do you still remember what are the equity of company? I have taught you in chapter 2 and chapter 2, chapter 3 and chapter 4. What are the equity of company? There are two. What are they? Class, I need your response. Do you still remember what are the equity of company that you
Share.
have learned in chapter 3 and 4?
Loan.
Loan is your liability. You already
Share
learned in
capital.
part 1. You already learned in part 1. Don't tell me it's in your equity. It's your liability. You have 5 components, right? Asset, expenses, owner's equity, liability, and revenue. Asset, you have fixed asset or non-current asset. Sorry. You have non-current asset. You have current asset. Similar liability, you have non-current liability, you have current liability. I'm talking about this one. So in company, can you give me the component of equity that you have learned in chapter 3, chapter 4?
Share capital.
Well done. It's your share capital. Okay, it's your share capital. For example, the issued and paid up one. The issued and paid up on your ordinary share capital. Okay, the issued and paid up on your preference share capital. Are you agree with me? This is the one that you record under your equity, betul tak?
Yes.
Okay, another one. What is another one?
Treasury share.
Okay, treasury shares is part your equity, but is actually against. But the treatment is against your equity. Meaning under equity you have to minus, betul tak?
Yes.
I'm looking for the pure equity. Pure.
Retain profit.
Well done. Retain profit. Retain. Spelling error here. Retain. This is a symbol of profit. Retain profit. So I hope you still remember, because actually I have told you accounting is like a process. You cannot forget what you have learned in part 1, part 2, or even in part 2, chapter 1, chapter 2, chapter 3 are all relatable to each other. So please don't forget, because accounting is like a process. You are not going to start a new thing when you go to the new chapter. You still carry on all the information or the knowledge that you have learned. So now we are going to prepare the changes of the equity. Meaning to say that when you prepare this statement, you are going to include all this account again. Because you want to see the changes. You want to see the changes. So included in the SOCI, besides then the share capital and retained profit, okay, you will disclose other equity. So in this chapter, you will learn another example of equity besides then the share capital and retained profit. So you will disclose all these component of equity. Okay, this is what we are talking about. Okay, so to show the changes, you are going to show the detail of the opening balance, the increase and decrease during the reporting period, and the closing balance. So this is the thing that we are going to prepare under SOCI. Alright, this preparation is the complement the profit or loss statement in providing information that enable an assessment of the full performance of the company. So let us look at the format. So this is the format of the statement of changes in equity. So as you can recall, okay, this is the component that you have learned in equity, ordinary shares, preference shares, and retained profit. So the new equity that you are going to learn in chapter 5 is asset revaluation reserve and general reserve. So these are the two new equity for you. So by the time when you go, let's say when you go to part 3, so if your lecturer asks you what are the component of equity, so you should be able to explain this all component, because this already learned in the earlier of chapter 2, and now you are going to learn another accounts under equity. So to show the changes, the first thing you will show the opening balance. This is the opening balance. Okay. Okay, so after that, you will show the increase or decrease during the year. And finally, you will show the closing balance. You will close with the closing balance. So you can see the changes, the movement. You can see that maybe the opening and closing is not tally to each other. Why? Because all of these changes. Maybe some will have no changes. For example, there is no transaction related to the preference shares. Therefore, the opening and closing will be equal lah, because there is no changes. So depend. The changes actually will depend on your question. This is just a format to show you. So if increase and decrease is actually will determine the debit and credit, and at the end will determine whether it should be add or less. As you can see here, okay, X without bracket is add. X with bracket means less. So how to know whether it's add or less? Actually, it comes from the effect, and from effect, you know the debit and credit, then only you know whether to add or less. For example, issue of share capital. When you issue of share, logically, you will credit to ordinary share capital. This is what you learn in chapter 3. So kalau credit to share capital, logically, does it increase the amount of share or not, class? If you issue share, does it increase your share or not, class?
Yes.
Yes, similar to bonus issue kan? It will increase your share. Sama juga kalau you buat right issue, it will definitely increase your share. Tetapi kalau you buat share buyback, katakan saya tak tunjuk ke sini. If you make share buyback cancellation method, contoh kat sini saya tambah included here. Okay, cancellation of share saya tulis. Of OSC. What will happen? What will be the adjustment? You akan tolak. Kenapa? Sebab cancellation of ordinary share, kita belajar chapter 4, debit the ordinary share. Betul? Credit to purchase open share. So, bila you debit to ordinary share, you will minus. So, the changes here will depend on your question. Okay, before I proceed to the next component, now let's go back to the SOPL just now. Okay, I forgot to mention to you that for MFRS requirement, okay, the content of the SOPL need to be grouped. Need to show by function. Did I mention just now, class? Did I mention that the expenses need to show by function?
Yes.
Oh, okay. I have already done. Okay, so as you can see, the expenses will not be listed individually. I mean the item in the expenses not to be disclosed by individual item. Instead what you need to do is that you are going to show it in its group. So the group is categorized by the function, not by the nature. So we have 3 different category: the selling and distribution cost, the administration cost, and the finance cost. And then about the structure itself is also being guided by the standard. As you can see, this SOPL is not the same as the typical SOPL that you have prepared for sole proprietorship. The outline is a bit different. But however, the content is still talking about the revenue and expenses. We are still talking about the revenue expenses. Okay, but in terms of the arrangement is different compared to the statement of profit or loss. So you have to follow closely this format, class. And on top of that, in addition to that, okay, a company need to show its other comprehensive income. Other comprehensive income represent the income and expenses that not typically record under the profit or loss section. Okay, next, what are other components? Okay, we have the statement of financial position. So I believe you are very familiar what is statement of financial position. Okay, this statement is to show about the information of the company's asset, liabilities, and owner's equity at a given point of time. So the format is as follow, more or less. This is just the same as what we have learned so far. So we are going to have this heading, asset, okay, the equity and liabilities. So as for the asset, okay, we are going to break down into non-current asset, current assets. As for the equity, okay, you are going to show the share capital, okay, the reserve. And then the liability, you are going to show it into non-current and current. Now, talking about the asset first, okay, please take note, okay, one of the important thing here is that according to the standard, you have to show your non-current asset, okay, by grouping all those tangible asset into property, plant, equipment. So this actually consists of all of the tangible asset. Remember what is tangible asset, class? Land, dah dengar tak? Building. What else? What else of the example of tangible asset, class?
Motor vehicle.
Very good. Motor vehicles. Another example?
Fixtures.
Have you ever heard office equipment? Have you ever heard office equipment?
Yes, madam. Yes,
Yes,
madam.
So all these tangible assets need to be grouped into one working, and then you have to show the notes of this asset, okay, the calculation of this asset, and then you just have to bring or to disclose the summary. This is just the summary total. The total summary here. Okay. Okay, that is one of the different here. And then in terms of the equity, so here you just group your equity into two, share capital and reserve only. But you know, under share capital you have many. You have ordinary share capital, you have preference share, kan? And then as for reserve, you have retained profit just now, you have what we call asset revaluation reserve, and you have general reserve, kan? Nampak sini? Okay, this one. This one kan? Kan ada banyak ni. You ada banyak ni. Tetapi when you continue preparing the financial statement, okay, the standard only require you to show in summary. So the summary can be break down into two. Okay, you combine these two as share capital amount, and these three as reserve. Understand or not, class? Understand or not?
Yes, madam.
Let's
Yes,
say the
madam.
ordinary share capital, okay, amounted to, katakan this amount is 100,000, and preference share capital is 50,000. So how much of the value that you need to transfer to the SOFP? How much, class?
150,000.
Very good, 150,000. Similar to retained profit, asset revaluation reserve, and general reserve. Let's say the amount here is kata 200,000. This one is 50,000. And this one is 30,000. So how much is the total to be transferred to SOFP? How much? 280,000. So when you prepare the SOFP later on, okay, the share capital here, you just record 150,000, and this one 280,000. Is that clear, class?
Yes, madam.
Okay, this is same as property, plant, equipment just now. So let's say we have many tangible asset. What you need to do is that you are going to prepare this note. Okay, I'm going to go directly to the notes. So these are the tangible asset. Tangible asset meaning the asset that can be seen, can be touched. These are all the tangible asset. So what you need to do is that you need to do the working. You need to show the carrying value of the asset. So how to find the carrying value? First, you have to find the cost. Okay. So after you have already find the total cost, you will minus with the accumulated depreciation. Then only you will get the carrying value of each of the asset. So you are going to total up all these tangible asset. Okay, you are going to add up all these tangible asset, and you will get the summary, the total of the summary. So this one you are going to transfer to SOFP. For example, if the, let's say the amount here, okay, the amount here is, katakan kita letaklah one by one. Kita letak here sini 100,000. And then the accumulated depreciation here will be katakan 20,000. Okay. Sorry kat sini balance carry down tertinggal kat sini. Oh sorry, a land usually tak ada apa? Land usually tak ada depreciation So there is no depreciation, 0. So the total here will be 100,000. 100,000. Okay, so we do the rest for example we take an example. Okay, building katakan the total is let's say 500,000. Okay, and then the accumulated depreciation is 200,000. So at the end you ada berapa? 300,000. Okay, as plant and machinery you have 50,000 and then accumulated depreciation is 10,000. So at the end you ada berapa? You ada 40,000. So 100,000 plus 300,000 plus 40,000, how much plus? 440,000. So this 440,000 is the total or summary of the property plant equipment, and it will be transferred to the statement of financial position. So the amount to be transferred to PPE here 440,000 based on the working that you have done. Okay, so this is how the statement of financial position will be prepared. Okay, next component is notes to the financial statement. What is notes to the financial statement? It is an integral part of this financial statement which to enhance the user's understandability of the statement of profit or loss, statement of changes security, and statement of financial position, and also statement of cash flow. The notes are cross-ref on item presented in the financial statement for explanation. For example, like for PE just now. Okay, for example, the notes, the number of notes is number 4. Is it number 4? No, number 2. So, since that you only provide for the summary, so what you need to do is that, okay, you will put notes for this account in the face of the soft P. So, here you will record notes number 2. So, you will cross-check with the notes. So you are going to prepare for the notes. This is the notes of the financial statement. Notes of the financial statement, and we are referring to number 2. So how do the 440,000 is derived? Okay, let's say the answer is 440,000 kan? So of course you need to know how do this amount derive? So you will check on notes to the financial statement number 2. Okay, this 440,000 is actually comprised of assets such as land, building, and plant machinery. So the costs are as follow, and the accumulated depreciation are as follow. Therefore, the carrying value as follow. So this is the use of the notes to the financial statement, which explain in detail of the item in the, for example, statement of financial position. Is that clear, class?
Yes, madam.
Okay, last but not least, the statement of cash flow. Okay, the statement of cash flow is another component of the financial statement, which to show the generation and absorption of cash and cash equivalent for the accounting period. It reports on the company's cash flow, meaning the cash flow meaning inflow and outflow lah. Okay, that comes from the operating, investing, and financing activity. However, this component is beyond of this topic. You will learn this component when you go to Financial Accounting 3, that is FAR 210, 210 in the part 3 later on. So in this chapter, we are going to learn these 4 components. SOPL, SOCHI, SOFP, and also notes to the financial statement. So as your assignment, okay, I want you to read on the format. Okay, actually I have explained you a bit on the format. Okay, for information, I have supplied with you the format which consists of comprehensive format. This is a comprehensive one, which include all the possible item. And then another format is the format that used for our classroom base. So for the FAR 160 classroom, okay, we will use the second one. It's actually extracted from the comprehensive format, but since our syllabus did not cover all of the item, so I have extracts the important one. Okay, so these are the format that we will use for our classroom based discussion. Okay, and then the next assignment is that I want you to read on the preparation and presentation of financial statement. And finally, okay, you can look up for the comprehensive example, okay, as given here. So this comprehensive example also has been attached in your Google Classroom for your reference. Then only we will start doing the exercises. Okay, so we will start doing the exercises given at the end of the chapter and also in the practice kit later on. Okay, so that's all for today. Do you have any question, class, to ask?